Welcome to another episode of China Update, where I provide you with the most up-to-date political, economic, and geostrategic analysis on the world's number 2 economy. My name is Tony. Let's jump in. Okay, happy Monday everybody. I trust you had a restful weekend, and I wish you all a productive week ahead. We begin, as we usually do, with economic and financial developments. Regular viewers know that China's policymakers have yet another financial crisis on their hands, with Chinese stocks being the worst performing of any major market in the world, down over $6 trillion since their peak in 2021. In a telling development, a post from a social media account of the US Embassy in Beijing has become a place for regular Chinese to vent their frustration at the slowing economy and the weak stock market. The Friday post about protecting wild giraffes by the US Embassy on Weibo has attracted over 130,000 comments and 15,000 reposts as of Sunday afternoon, most completely unrelated to giraffes, but rather angry online protests about the state of the economy. One user wrote that the post, quote, has become the wailing wall of Chinese retail equity investors. End quote. Another highly liked post expressed, quote, could you spare some missiles to bomb away the Shanghai Stock Exchange? End quote. And another wrote, quote, the entire giraffe community is filled with optimism. End quote. A sarcastic dig at a Friday article from the state-run People's Daily called The Entire Country is Filled with Optimism, an article which was widely mocked online. The article seemed intended to counter growing gloom over the economy and stock market leading up to the week-long Spring Festival, but it saw almost immediate pushback from netizens who pointed out that it was published as the stock market was plunging to a 5-year low. One post on the Friday article darkly expressed, quote, I could no longer love the country after I started investing in the stock market. End quote. Meanwhile, the policy debate around what Beijing should do about the stock market, which is now bleeding into the real economy, continues. Over the weekend, Liu Yuhui, a prominent academic with the state-backed Chinese Academy of Social Sciences, speaking to state-run financial media outlet 21st Century Business Herald, called on Beijing to set up a stocks stabilization fund as soon as possible to boost market confidence, with an aim to get its size to 10 trillion yuan, $1.4 trillion or more. We know that authorities are already considering a package of measures to stabilize the slumping stock market, including the mobilization of about 2 trillion yuan, mainly from offshore accounts of Chinese state-owned enterprises. Liu is calling for a fund 5 times bigger, and it's still unclear whether such a fund, which would be incredibly expensive, would work. Meanwhile, Chinese financial media outlet Caixin writes that private equity and venture capital investors are now struggling to find new investment strategies due to the market slump. According to equity investment research institution 02 IPO Group, in the first 3 quarters of 2023, indicators of fundraising, investment and exits by private equity and VC firms in the Chinese market all declined. In the first 3 quarters of 2023, there were only 57 new funds in foreign currency, down 45.2% year-on-year, raising 91.8 billion yuan, a decrease of 59% from the same period in 2022. During the first 9 months of last year, private equity funds made 6,510 investment deals in China, down 25.9% year-on-year. The value of these investments dropped 31.8% to 507 billion yuan. Caixin explains that, quote, China's 3-year stock slump has made it difficult for private equity and VC firms to exit their investments. China ended 2023 with the world's worst performing equity market as the blue chip CSI 300 index fell for the 3rd straight year, plunging 35% over 36 months. End quote. Adding, quote, China's attractiveness in the global private equity market was further weakened by intensifying geopolitical and ideological conflicts. Investors, especially from the US, have switched from mandated allocations for the Chinese market to caution. End quote. China's stock sell-off deepened last week, with the key index, the CSI 300, falling to a 5-year low. The index declined 6.3% in January, a record 6th straight month of losses. Yesterday, Sunday, the China Securities Regulatory Commission vowed to prevent abnormal fluctuations, saying it would guide more medium to long-term funds into the market and crack down on illegal activities, including malicious short selling and insider trading. Analysts were unimpressed with this statement, however, with Shen Meng, director at investment bank Chanson & Co., observing, quote, "The statement sought to stabilize investor sentiment, but didn't touch on fundamental problems, including a lack of confidence and huge economic uncertainty. Those issues are the causes of abnormal market fluctuation." End quote. Hebe Chen, an analyst at IG Markets, observed yesterday too, quote, "Last week's panic selling in the mainland stock market once again highlighted that all the recent economic stimulus measures by the Chinese government and the central bank are incapable of alleviating the profound pessimism embedded in the investment market. Considering this, the pledges from the China Securities Regulatory Commission, lacking any tangible measures for support, are unlikely to create any meaningful ripples in the market." End quote. And indeed, yes, the market was not impressed. In trading today, Monday, the day after the statement was made by the China Securities Regulatory Commission, Chinese stocks fell again, adding to last week's rout. The Hang Seng China Enterprises Index fell as much as 1.5% before seeing some pairing. The CSI 300 index also dropped. Next up, we look at another curious article from the Ministry of State Security. But just quickly, if you're enjoying today's episode of China Update, I have a huge favor to ask. That is to like and subscribe. This is the only way the channel can grow and be shown to new people. So if you do appreciate what I'm doing here, it's just me making these episodes every day. Liking, subscribing is a huge help. And for those who want to go the extra mile and help me keep the channel financially sustainable, I rely primarily on subscriber support. Patreon and Buy Me a Coffee links are in the description below. As always, thank you so much, everybody, for the ongoing support. Next up, the recently highly outspoken Ministry of State Security, China's top intelligence and secret police agency, last week published another curious article. This one warning that foreign forces are using the pretext of environmentalism to undermine China's economy and development interests. It's quite the article, and it's important that we take note of the points made within, as this is likely going to become a mainstream view in Beijing. Sarah Global Times, writing on the commentary, reports, quote, "Certain countries have introduced a series of new trade restrictions against China under the pretext of environmental protection, attempting to hinder the long-term positive development of China's foreign trade industry." End quote. Adding, quote, "Some countries, out of their own interests, have been maliciously smearing and suppressing China's seafood exports, attempting to win the international market through unfair means." End quote. On the one hand, the outlet continues, these countries have imposed so-called technical standards and ecological labels to force Chinese companies to disclose information about their upstream and downstream products, and conducted groundless investigations into their production and business activities. Multiple cases uncovered by national security agencies show that overseas anti-China forces, after imposing restrictions on the export of important agricultural products such as cotton and tomatoes from Xinjiang Uyghur Autonomous Region, have included China's seafood exports on the list of restricted products under the name of environmental protection. As an aside, we note that these restrictions on products from Xinjiang are due to human rights concerns, including accusations of genocide, not environmental concerns. We continue with the Global Times. Quote, "The Ministry of State Security pointed out that this trade protectionism disguised as environmentalism is a carefully designed political conspiracy that should be guarded against. A Chinese national surnamed Li was recruited and exploited by overseas anti-China forces during his overseas studies. He established extensive contacts with overseas industry associations, multinational corporations, major media outlets, and non-governmental organizations. After returning to China, Li, under the command of overseas forces, established a commercial consulting company specializing in collecting information on China's seafood industrial chain and supply chain and evaluating the social responsibility of Chinese companies." End quote. We've been following these Ministry of State Security articles published in recent months, and this piece stands out as being about a subject quite far removed from the Ministry's core competencies. Begging the question, is the Ministry of State Security being directed to make these posts, or, in the current hawkish and highly security-obsessed environment, is the Ministry of State Security pushing the boundaries of what it previously was permitted to communicate to the public? Let us quote a passage from the original Ministry of State Security article, which gives us an idea of the current sentiment and zeitgeist within the national security establishment in Beijing. Quote, "Such trade protectionism not only severely undermines fair, reasonable and transparent international economic and trade rules and the stability of global supply chains, but it also has become a focal point for foreign anti-China forces to comprehensively contain China. This is a maliciously designed political conspiracy." End quote. Okay, that is today's episode of China Update. Thank you so much everybody for watching. Have a good Monday, and I will see you all tomorrow.